Hello and welcome back to the FX Evolution Currency Trading 101 course. In this lesson, we will look at lots and leverage within the Forex markets and what makes them so unique compared to other markets. Let's begin by talking about what a lot is. A lot is a contract size within the Forex market. One lot equals 100,000 units of the base currency, and this can also be referred to as a standard lot. Let's take a look at some of the other contract sizes or lot sizes that are very popular terms within the Forex markets. There is a 0.1 lot, which equals 10,000 units of the base currency, and this is also referred to as a mini lot. There is also a 0.01 lot, and this equals 1,000 units of the base currency, and is commonly referred to as a micro lot. Sizes such as the micro lot are what makes Forex trading unique, because in no other trading environment are you able to actually enter a market with such a small amount of money and with such a small amount of brokerage attached. If you were to trade shares, you would generally be paying anywhere from $5 up to $20 or $30 if you are trading the Australian stock market. The great thing about Forex is that with a micro lot, you'll be charged by the size of the contract. This gives you the opportunity to risk minimal amounts of money while you build up your confidence when creating a trading system. Generally, a trader will open a demo account and then will move on from a demo account straight into a live account, potentially risking too much of their capital while they are learning to trade. By using micro lots, you are actually able to risk an amount less than a cup of coffee per trade while you hone your skills. I find that this is a great tool to allow traders to actually begin their trading journey with real money, and they are far more likely to take it seriously compared to a normal demo account. Let's now break down lots to a dollar value. The example that we can see on the screen shows the Great British Pound US dollar. If we were to try and buy one lot of the Great British Pound US dollar, we would require 100,000 British pounds. Let's say the price was 1.46327 on the Great British Pound US dollar quote. This would mean that to buy one lot of the Great British Pound, you would need to provide $146,327 US dollars to open the position. Now that's a lot of money, and most traders generally don't have that available in their trading accounts to use for just one position. To get around this issue, let's take a look at how leverage works and see how it can help you enter the market with one lot. Without leverage, we have already established that one lot of the Great British Pound would require you to have a large sum of money in your account. If you are trading a mini lot, you would require at least $14,632 in your account, which is still a reasonable sum of money for what is essentially a small position in the Forex market. And finally, if we were trading a micro lot, you would require at least $1,463 in your account. Now, when it comes to Forex trading, it is unique and a little different to stocks or other trading instruments. You are generally looking for small movements within the market, where even 0.1 or 0.2% is enough to potentially profit from your trades, but you don't often have large amounts of money free in your accounts. Let's now take a look at an example with leverage. The amount of leverage available with brokers can differ from 50 to 1, 100 to 1, 200 to 1, and even up to 400 to 1 in some countries. If you reside in the United States, you may need to check with your local brokers, as there are restrictions on leverage in place which can be as little as 10 or 20 to 1. Let's take a look at a leverage example at 100 to 1 and see how it can benefit us as traders. Without leverage, you would need $146,327 in your trading account to trade one standard lot of the pound US dollar. However, with the power of leverage at 100 to 1, you are able to actually borrow 99% of the money from the broker. This means that they will provide $144,864, and you will only need to provide $1,463, or 1% of the money, and still get the one standard lot exposure of the Great British Pound US dollar. This is incredibly unique to currency trading, and I think it is one of the most exciting things about Forex. Some people would consider it dangerous, and that is why it is best that you use appropriate risk management techniques. However, it can be used as an excellent tool as part of a trading plan. Let's take a look at a leverage example at 200 to 1 to further clarify how leverage works. If you are using 200 to 1 leverage, you would still require the same amount of money. So that's $146,327 US. But this time, the broker will lend you 99.5% of the money. This means that you will only have to provide $732 or 0.5% in your trading account to actually trade with the same amount of exposure. To summarize what we have covered in this lesson, remember that one standard lot equals 100,000 units of the base currency. One mini lot equals 10,000 units of the base currency. One micro lot equals 1,000 units of the base currency. And finally, using leverage allows you to hold large positions without having a substantial balance in your account.